insurance. We'll talk about insurance finance and youth. So later on in the segment, we'll be having different professionals coming up to talk to, share their stories and how they've been successful in the things that they do. For today, I know so many of you are asking questions. Some of my clients called me and like panicking and say, oh, I received this letter. So I will explain to you what that letter is. So, hi, just in case we've not met, this is Dr. Shonwa, okay, the CEO of Emergence Financial Services, where we help people to put the right financial protections in place for themselves. And when we talk of financial protections, we are looking at creatively using insurance to transfer your risk, whether it's be personal or even business. So after this, or even during this, if you hear what you like, contact us and let's help you. We'll always take you through a process. Honestly, it's always about helping you. So in whatever situation you are, even if you have a cover before, we can give you a free review. If it's okay, we'll pass it for you. If we can make it better, with 99% of the time we're able to make it better, we will make it better, and we help people in the United Kingdom. So you're in Wales, Scotland, England, yes, we can help you. All right. So a few years ago, inflation wasn't really a big deal, honestly. But post-COVID, then inflation was hitting 10%, 12%. Meaning if you have any form of insurance, Pradvachi had a life insurance set up maybe about 10 years ago, and inflation wasn't as bad. Right now, whatever you had then may not be sufficient for what you need it for in the period that it may pay out. So we have what we call indexation in insurance, and that is to protect your insurance against the effect of inflation. All right, and it's also called increasing cover. So if you got that letter, right, so that says your cover is increasing, no, there's no need to panic at all, because when we help you to set up your insurance, our goal is to make sure that we'll make it the right fit for you. Some people will insist on level cover, meaning, you know what, I don't want anything to change. I don't want my premium to change. Whatever amount pays out, whatever it pays out is all right. That's fine. But you know what? If you take on £500,000 in life insurance now, and you're covered for the next 30 years, the buying power of £500,000 as it works today is not the same thing in the next 30 years. So why would we not do something to help you to keep the integrity of the amount so that it is viable for the period that you may need it or your family may need it, okay? So this is what we'll do, we'll index it. So at the start of your policy, this does not affect your premium at all. But on the anniversary of the first year or each year, you get a letter that says your cover is increasing. Now, you have three things that you can do in that. One, you can say, you know what, I want the cover. You don't need to call the insurance company. You don't need to speak to anybody. It will just kick in, all right? The second thing that you can do is, you know what, this year, I'm not sure I want any form of increase, because the way the increase works is, like I said, it adjusts your amount to inflation. So let's say, for example, you took out a policy of £500,000 over 30 years, like I said, right? And initially your premium was, let's say, £50 when the cover was set up. So for the first year, you pay £50 every month, right? When it is up to 1 year, then the insurance company writes, they'll look at the inflation, and it just always comes in most cases at RPI, so retail price index, meaning whatever the Bank of England says is the inflation, they will use that figure and adjust your payout. So that £500,000 now, if they're going to send you the letter, it will now be maybe 500,000 and 501,000 pounds. So that means they've adjusted to inflation. So instead of 500,000 covered now, your cover is going to be 501,000. All right. And your premium may also go slightly up, maybe by £1. So instead of £50, then it goes up to £51, just to adjust to that. Now, you don't have to take it, but if we don't add it to you at the beginning of the policy, then you won't have the option of refusal. That's why it's important for you to allow it to be added at the beginning, right? So that's what we do for all our clients. You know, when we have that conversation, you know what? Let us help you protect against inflation. When is the first year and you don't want it, you can say, you know what, insurance company, don't worry, I don't want you to adjust to any inflation. Keep my premium the way it is, and then your cover also remains the way it is. So you can refuse. So the second thing is you can refuse it. So if you refuse it the first year, you may have option to add it on the second year. However, if you refuse it 2 years in a row, then that option cancels, then you may not have any opportunity to be able to add it on again. The policy just stays the way it's, the level cover. There's no change. It's all right, right? You're not losing anything. It's just that you don't have that inflation cover again. And the third thing that you may do is, you know what, I don't want it at all. So you can actually cancel it, you know. So the second option is you can refuse it and say, you know what, just for the next year I may consider it. But if second year you don't want it again, that's it, it cancels. But outrightly on the third option, you may just say, you know what, I've thought about this, I don't want it at all. You refuse it, and that's it, cancels off your policy. It is an addendum. It does not affect your policy. It just helps you to be able to arrange it and make sure that that indexation is there, that if inflation is bad, the amount that pays out, you know, make sure that it is relevant to that period. It is really, really important. So if you're watching this video and you don't have any form of indexation on your policy, because maybe you just didn't understand it when the advisor spoke to you, then talk to me, talk to the members of my team. At Emergence Financial Services, we are helping a lot of people become financial advisors too, because what we've seen is that lots and lots of people need to be educated, and there's so much that one person can do. So we're giving you an opportunity to get trained as part-time or full-time financial advisor. So if you want to explore that, please send us your CV on careers@emergencefs.co.uk. And like I said, even if you're an advisor in the industry, please, you can send this video to your clients to help you explain to them that there's no reason to panic at all when they get that letter. It is to inform you. So the first instance, you don't need to do anything if you're okay by it, right? There's no need for you to call the insurance company. Maybe you want to know. So first option, just leave it the way it is. You don't even need to call them. It's just going to, like, the following month, your premium will increase slightly, but your amount also increases slightly. The second option, like I said, is for you to say, you know what, defer it. I don't want it this year. And the second year, you can also defer it. But on that second year, for most of insurance companies, they're just going to cancel out that addendum. And thirdly, just say, I don't want it outrightly, and they cancel it off. So that's it. So do not panic. Send this video to whoever it may help. And if you really are not watching this and you don't have any form of insurance or maybe income protection in place, please speak to us. It is the right thing to do to transfer your risk, because life on its own is a risky business. Have a fantastic one. That's it on the synergy today. 3 things to do when you receive the letter. Your cover is requested. 1, ignore, don't do anything. Your cover will just adjust. Secondly, you could call your advisor. So call me, call whoever shared this with you, and say, you know what, I want it deferred. Yes, deferred. First year, second year. If second year is cancel out. Thirdly, just say you want it cancel completely, and it's fine. It doesn't affect your policy. It's just that there's no more adjustment to inflation. And if we do not, let me reiterate that, if we do not add it at the very beginning, you have the option to add it when the policy already goes live. You have to change your policy to be able to add indexation. So I say it makes sense for you to index it from the very beginning. And for some of the insurance companies, it actually does give you a little bit of discounts to when you add indexation, because it is the right thing to do. Have a brilliant one, and please share this video with the people that you love. And if you have more questions, please send them to me, and I'm going to do a video and answer these questions. Above all, I'm excited. It's a beautiful day. Let's make sure that we put in all the best in every single day, that we may be all that we want to be and keep adding value.